All right, everyone, I believe you're ready for our next session. Credit and debit cards may still dominate globally, but their grip is slipping. Digital wallet, QR payments, and A2A options are rapidly gaining ground. Right here with us, Dr. Demetrios Zamboglou, CEO UAE of Blockfields, and his panelists will share their perspectives on the wallet adoptions, data identity trust, and more. Let's delve into this session. No country for all cards. Our digital wallets taking over. Please give our speaker a big round of applause.
Thank you guys for making the time. It's going to be a very exciting panel. The guys are not very pumped, but we will get them pumped, so don't worry a lot. So yes, no country for old cards. Our digital wallets taking over. Charmaine, if you can, maybe you can tell us a little bit about yourself, who you are, what is your current title, and where you work.
Thanks, Demetrios. I'm Charmaine Alexander, and I'm a product manager at Rapid. For those unfamiliar, Rapid is a global payments and payouts company who are helping businesses move money instantly and at scale. At Rapid, I work for the wallet infrastructure and FX capabilities, which basically ensures our clients are able to pay or get paid locally and across borders.
Lucas?
Yeah. So my name is Lucas. So I work for Kobo. I'm leading the business in Kobo. So Kobo, we are a digital asset wallet, or it's a digital asset custody provider based in Singapore. So what do we do? So I know today we are talking about digital wallets. Our Kobo, what we are doing is more like digital asset wallet, or say crypto stuff, right? And what we help is for business to do crypto pay-in, crypto payout, crypto treasury management, and so on.
And Mohammed?
Thank you, Demetrios. My name is Mo. I'm Director of Business Development for Cypher BC. We are a digital wallet infrastructure provider and a crypto debit card aggregator. So this panel is really fun as we kind of combine the both in the best of both worlds.
And what do you do there?
I'm Director of Business Development.
Yeah, talk to us a little bit more. What is business development there?
So basically, I'm in charge of sales. I work alongside marketing department, partnership department, events. So basically, my job is to make the business grow in any way possible.
Yeah. Thank you. So I thought about creating this first question to be a little bit about fascinating projects. And maybe, Charmaine, you can tell us a little bit which is the most fascinating project you worked this year.
So one of the most amazing projects that we worked this year was integrating stablecoins in our payout stack. In the markets that we work in, we saw that our platforms wanted to avoid delays, and they wanted to avoid the cost of traditional wires and move funds quickly. How did we come to this is a year ago, we initiated settlements in USDT. And we saw a strong demand from platforms, which is what led to eventually enabling stablecoin rails in our payment stacks as well. And I think stablecoins is something which touches a lot of areas of product, right from liquidity to compliance, which makes it so exciting.
You know, stable coins, I think this year is the year for stable coins. Sure. So well done, guys. What about you, Lucas?
Yeah, I feel like with Charmaine, like we are sort of meeting each other in the middle, right?
It's very nice.
So traditionally, back to a few years ago, we are doing purely crypto stuff, right? Supporting crypto exchanges, crypto projects. But since last year, we are also going to the payment area. So if you see a lot of business, if you look at FX over here, right? A lot of them are starting to accept crypto as a deposit method. Market share is about penetration is about 20% to 30% for a lot of businesses. Now you're even seeing for the end consumer side, you have the payment gadget who supports crypto. Now you have your local wallet.
What do you mean by payment gadget?
Payment gadget as in the checkout gadget, or payment gadget on e-commerce website and some consumer goods. you're starting to have the crypto checkout option. So previously it's like provide your address, right? Send to that, it will confirm that for you. But now a lot of businesses are doing one step forward, saying, hey, here's a QR. In the checkout page, you select, here's Visa, Master, here's your local wallet, here's crypto, right? So to provide that gadget and do the entire clearance and settlement through crypto is something we are building this year, and this is super exciting.
And you did this for what cryptos, the major ones?
The major stable coins. I mean, for some businesses started to accept the Bitcoin or Ethereum, other type coins, but I would say stablecoin are still dominant because I think consumers are still not very comfortable to the fluctuation of the price. Yeah, the quotation could be hard. Yeah.
And what about you, Mo?
Well, in the past 6 months, so at CypherBC, we focus on wallet infrastructure. And in the past 6 months, we issued our warm wallet, and a couple of months ago, we issued our cold wallet that is directly linked to our warm wallet. It's a cold wallet that never touches the internet, only connects to Bluetooth. Honestly, it was one of the most fascinating projects that I worked on in terms of a business cold wallet. As there's levels on levels on level of security, of MPC technology, role-based approval protocols, and basically we have something called the emergency exit, where if you are at any point held at gunpoint, there's a secret kind of code that you can put into to the physical device that can lock the device without showing that it's locked. It will operate normally, and it will send a signal to the police every 10 minutes with your exact location, which is honestly one of the most fascinating things I've seen in the market right now, especially with the need of such security.
Have you checked that if you do this, the police arrive on time?
Well, with this, you need kind of from the people and from the police, you need some kind of connection. But yes, it does work.
In Dubai, they do it.
In Dubai, exactly. Yeah, in Dubai.
In Dubai, they will arrive before you press the button. So, okay. All right, let's start with the first big topic, wallet wars. Who is winning and why? Charmaine, maybe give us a little bit an idea. How do people choose wallets? Maybe tell us a little bit about what do they look for providers out there.
So at Rapid, we have seen this, that especially in the emerging markets like Indonesia, Philippines, Thailand, India, Brazil, people are looking for something which helps them move funds faster, with convenience and with trust. So for example, wallets are embedded in any of the local apps, right from a ride-hailing app to bill payments app or a local e-commerce website. So it is easy for the users to use. And also in terms of if I am a user, I go on a website and I have to add my credit card number, it might become more riskier. But if I'm using my own wallet, it might be just easy. And for merchants, I think it's all about getting increase in conversion and lower transaction costs. And this is what we've seen in Rapid as well in terms of why wallets might be chosen above cards.
Do you think a client will check where you're regulated? Will a client check on the checkout who is the company, depending on the brand of the company, and then he will decide to check out or not?
I think it depends on how local the brand is. If it's a local brand and they see that the local wallet is being used, I think at that time they would want to, or they'll be more trustworthy to use that at the checkout page.
Lucas, what do you think from one provider to the other provider? What makes one of the two better?
Understand. I think from a digital asset wallet perspective,
yes,
there are several sectors. Definitely, first of all, it's definitely security. Security is definitely something important, as in how secure the wallet is, how risk-proven that is.
But how will the client know how secure the wallet is?
If you talk about end consumers, they might not have very deep knowledge about crypto, but it's also always about what kind of, for example, exit method you provide to your client, what kind of recoveries you provide. If you look at Binance, OKX, everybody launched Web3 wallet in a so-called keyless manner, right? In technology perspective.
I think for this kind of group, maybe tell us what is Web3, because you're giving so many buzzwords out there in this
Of course. So when it comes to digital assets wallets, probably people heard of like not your key, not your coin, right? So you must hold the key on your mobile phone. But another challenge is people may worry about what if I lose my mobile phone, right? I lose my asset. So people are coming out with different ideas to make sure it can be recovered, yet your backup, so-called your backup phrase, do not leak, right? So there is a MPC's technology we are more already mentioned. We can break the phrase into several different parts through our algorithm, whereby you hold one, I hold one, we co-sign the transaction together, but you don't have to worry if you lose your own, right? And you don't have to worry like this company is compromised or got hacked, as long as you still keep your pieces there. So this method, crypto exchanges brand this as so-called keyless wallet, which makes sure there is no single point of failure. So this gives people, then they use like Web2 logins, Face IDs, those like method that people familiar with, right, to lower down the barrier. So I think you bring the efficiency there, at the same time you bring enough security trust to your users. They will start to trust this wallet and start to use this wallet. And it's relatively the same. So Cobalt will do institutional B2B kind of business, but it's exactly same idea when it comes to institutions to choose a wallet versus another one.
I agree. Security is definitely one of the top 2-3 things that clients want to look at. But I will think UI, UX is much more important. So if people do not understand what they're doing, then how they will be able to use the product?
Yeah, absolutely. So if you talk about like digital asset tokens, there are so many tokens. One token like Tether or Circle stablecoin can be in many chains.
Yes.
Right. So designing that carefully and make people understand as simple as enough. That's something important for user adoption as well. Yeah.
Mo, what about you? What do you think are the other important things when you look at the wallet?
Well, from my perspective, we work with institutions. So security is definitely number one. And then comes scalability. Because a lot of companies come from Web 2 to Web 3 and they start to grow. So they will need something that can support them when they are a small business and then move on with them while they grow. So scalability is a big thing. Also, when it comes to institutions, user experience is not as important as cross-border payments. So you're talking about speed, you're talking about pricing, you're talking about security. So when it comes to institutions, it's a bit different than when you're talking about clients, where like institutions don't care about user experience as much as they care about everything else that I mentioned.
Okay, that makes sense. Okay, let's go to the next slide, from swipe to scan. I mean, we talked a little bit about QR codes, and maybe the last page of how you want to pay is Visa, MasterCard, and now there's a QR code. And when you scan the QR code, you never know where you go. You go to another provider, you go to your MetaMask wallet, you're never sure. Maybe, Charmaine, you can tell us a little bit about these new ways of paying?
Of course. So I think accounts to accounts or QR code based payments have completely changed the landscape of payments. Take Pix, for example, or UPI in India. It has turned the settlement times from days to weeks, which is such a major win for businesses, because that means that through lower costs, through speed, and through a better user experience, they are able to get much more conversion and much more massive business in return.
Yeah.
And I believe that's one of the reasons why QR code is, or accounts to account payment is a better alternative, especially if you're paying locally.
And I have some notes here. India, China, and the UAE is pioneering in those aspects. Do you agree with this?
Definitely, and not just India, China, but there are many more countries as well, especially the emerging market countries who are pioneering, because I think thanks to the government initiatives, especially the payment infrastructure, the regulators collaborating and proactively approaching to have better innovation, especially to pay locally and faster. I think that's why the innovation is faster and adoption is better in such countries.
So, Lucas, do you agree?
Yeah, I agree. And I think if you look at QR payments, right? So I think it especially boosts the merchant adoption, right? Because previously, if you talk about cards, I didn't have a terminal. There are some fixed cost investment for small business or even like individual merchants. They probably don't have the access to that. If you talk about like China, India several years ago, right? So that's where I think QR code payment is booming in these countries and now spreading to globally, right? So that's one thing. And if you take that analogy into crypto, I think it's a similar idea because for QR, yes, it lowered down retail user entry barrier, lower down merchant barrier, but you still, as a company, you want to build this system, right? You still need to invest on your entire system. But if you look at blockchain, right, it's like there's a community there, right? There's a node miners there running that for you. So you don't even have to build that system by yourself. You just choose, hey, I'm going to Ethereum, I'm going to Solana. You can plug and play right away. So I won't say digital asset wallet are taking over nowadays. It won't be realistic, but if you take that trend looking forward, that's something you really can dream about, or not dream about, like see. Yeah.
I think I first saw this kind of technology in 2014 when I was in China, when I was in WeChat, and people were sending me these coins. I thought, these are real coins. And then, yes, these are real coins. You can cash them out. And nowadays, I mean, everybody's using some kind of chat. And take example, Telegram, the Ton coin. You can just have your own Telegram channel ID. I can have my one, and then we can send money to each other.
Absolutely.
With the click of a button or just pressing our finger there. What do you think this trend will continue?
I definitely think this trend will continue, but it's about a matter of coexistence. So nothing is going to take over anything. It's just that about things will go together. So like you said, in China, they have WeChat Pay. And this came from the lack of like credit card penetration and how fiat was the dominant currency there. So this opened an opportunity for applications such as WeChat Pay. Take example from our team. Our co-founders come from the mobile payment into the Web3 payment. So it's all about evolution. It's all about moving forward. So I don't think anything is going to replace anything at this moment, but it's just a matter of coexistence. And I think coexistence is going to go on for a long time.
Do you see any new trends in Europe, in the US?
Well, Europe and the US specifically right now, they're having a lot of problem with regulations. So after they set everything up and after there's a clear regulation framework, I think, yes, this trend is going to start popping up in the US and Europe.
Lucas, fintech companies, banks, will they coexist? What do you think? Will a bank become more fintech? Will a fintech transition to a bank? Or they will be just separate? Because a couple of years ago, I've seen many people trying to launch their own fintech company and just merge finance and technology and create an EMI or a hybrid stablecoin project.
Yeah.
But nowadays, banks are also coming in the game.
Right.
So what do you think?
I think agree with more that, quote from you that nobody gonna take over anybody. It's more about coexistence because bank definitely they have very unilateral advantage when it comes to skill, when it comes to their user base and stuff. But always being a larger enterprise, they when it comes to moving things fast, they have their own challenges in certain ways, right? And also regulations. But everything built based on this banking real infrastructure. Fintech startups are the ones who generate innovative ideas, roll things out from a smaller scale, from a more niche angle. That's how things started get innovative, right? So if you look at all these Web3 startups who are doing like crypto, like our client who are doing crypto card payment, who are doing global B2B cross-border transfers, what was supposed to be bank's job, right, or payment network's job, but why those fintech startups are taking over is like, yeah, they are smaller enough to quickly maneuver, to quickly find opportunity and roll it out.
So let's go a little bit on smooth checkout. What does it take to do a nice UI, UX? Do we lose people somewhere in the middle, or is the onboarding frictionless, or there is gaps there? How can we make things better for the industry when we're creating such technologies? I mean, we can talk from the institutional side, we can talk from the retail side. It's up to you guys. Charmaine, maybe you can give us your idea.
Sure. So I believe that friction kills conversion. Every extra second that a user has to spend on checkout page, that's where you start seeing the drop-offs from the user. I gave example of a customer entering his card details on a checkout page, and then he's waiting for an OTP.
Yeah.
While with the local integration or with the wallet integration, he probably just needs to use his biometric, and it's a one-click checkout and he's already in. So I think that definitely lesser the friction, more the conversion the merchants would see, as well as wallets also need to have lower cost. So it's a win-win situation for all.
Yeah, but sometimes you need to verify something twice, because imagine if I'm sending you a big amount of money and then you say to me, do you really confirm that this is the right address? And then you take the risk.
True. But I would feel that when I'm entering card details on or on a checkout page, it might be a little more riskier, and I might worry about fraud with the current scams or phishing scams that takes place where the websites look absolutely similar and I give away my card details. So probably having a local integration where I just get a biometric on my mobile app and I do not share any information. I just get a link, and using biometric, I'm already in and I complete the checkout.
Lucas, I haven't seen this in the market as well. Coming to this 1 million, maybe there should be a system like I will just send $1, let's see it land, and then I will send the remaining ones.
Yeah.
Do you accept? And then there is just a checkbox.
Right.
There is still technologies that have not yet been implemented that it will change people's lives actually.
Exactly. But if I tell you I write this in a smart contract, then you become skeptical again, saying, "Hey, how secure that contract is?" Right? So I think it's a keep going challenges. Although in blockchain world say, "Hey, if I give you this address, you verify this address," it should be static, right? You can't send it over. But in reality, I mean, even for myself, I'm still doing can I send you $10 first for verification? So I think that the challenge still exists. But I think solution-wise, of course, biometrics verification that lower down the barriers. You use your Face ID to sign your transactions for crypto. That happens. But I do agree that challenge or that mentality still exists in people's mind. Yeah.
Mo, what do you think?
So from an institutional standpoint, what we usually do is that we have clients send the $10 first, wait for confirmation, send the rest. But in our new hot wallet, we implemented something called role-based approval protocol, where basically what you do is you set up your entire company. So basically there's going to be the initiator, and after the initiator makes a transaction, it will go to his superior. And after that accepts it, it will go up, above and above and above until it reaches the signer. When the signer signs it off, the transaction is made. So this way you have multiple people watching the same transaction going on. And this eliminates kind of failure, because if I missed it, and then if he missed it, and if she missed it, it's going to be tough for everybody to miss that the address is wrong or the amount is wrong. So this kind of gives you kind of like a more level of security about that everyone is approving the transaction before the transaction.
Do you see the confirmations in real time in the system?
Yes. So we have a mobile app, and then we have a desktop version. And as soon as, let's say, for example, I initiate it, then my superior will receive a notification that there's a transaction of 1234 initiated by Mo that needs approval. After he approves it, it goes to his superior all the way till it gets to the finance department, and then they sign it off. And you can set up your role-based approval protocol from 2 to 3 people all the way up to whatever your team can handle.
Time goes so fast, guys. I mean, your answers are amazing. We only have 6 minutes. I'm not sure what I will be asking here.
Yeah.
So maybe let's talk a little bit about local wallets and global wallets. So I think these countries in Asia, as soon as you arrive to these countries, you have to use their local wallet. I do not know, is this the reason that international companies didn't land there, they didn't do the right market analysis, or is it about trust, that people trust things that already exist there and you can see the team that is there? What do you think, Shami?
Sure. So I definitely believe that cards are not going out anywhere internally because cards do provide the utility of travel or credit-based transactions which wallets miss. For wallets, I would say that definitely there is a need for an orchestration layer or an abstraction layer which basically has a unified platform where companies like Rabbit come in who already have a unified payment system where they have integrated with local wallets in the places, and then companies can directly integrate with such orchestration players and eventually do transactions in local areas. So I definitely think that it might be difficult because the compliance rules, payments rules, refund flows, everything differs for each region, especially when it comes local. But then something like an orchestration layer helps to unify everything.
What do you think, Lucas?
Yeah, I believe I agree with the unification part in the country, and we talk about why QR payments was there right at the beginning. Then for nowadays, especially in Asia countries, take Singapore for example. Yes, you can use card for the payment, but for local smaller business, you're still a lot of them are relying on, for example, GrabPay or the Pay Now QR unified by Singapore government.
I think it was the first country I've ever seen a QR code pay was Singapore. Yeah. And you could pay like a sandwich or a coffee with a QR code. Yeah. I went there, I said, what is this? Yeah. And it was just scan it. I said, scan it, yeah.
And the link with many of your banks. You see there are multiple logos, a few lines of logos under the QR code, right? So they unify the QR code. And even for crypto payment, for example, GrabPay, they launched a partnership with AAA that to accept deposits via crypto. Mm-hmm. So that is more from a digital asset participant perspective. We also need to work with the local providers to enable the retail user adoption. Yeah.
Okay, we should start closing then this panel with one of the most interesting topics of the year, stable coins. And Mo, we can start from you. USD1. Trump and this Trump administration or his parallel companies of the family, they created a new stable coin that was also in the media. Do you think there is a trend of companies creating stable coins? If yes, then why? I mean, I read this morning that JP Morgan is also doing their own stable coin.
Well, there's definitely, I wouldn't say it's a trend, but it's definitely coming up. For example, the UAE as well launched their own stable coin. And, in a time where this is the evolution of finance happening right now, we need something that's stable that we can pay with. Because it's not doesn't make much sense to pay with altcoins as the prices are changing every second. So there might be a trend where there's going to be more stable coins going on as each country will issue its own stable coin for it to be used in its own country.
But why is stable coins so important? Why do we need so many of them, first of all?
Well, we don't need so many of them. But why are there so many of them? Options. Companies like to create options. Plus, they're making money off transactions. So the more it's popular, the more it's going to work. Why do we need them? As I said, because it's a payment method. It's not very smart to pay with Bitcoin when today it's like, for example, it's 100K and tomorrow it's 110. Whether we can pay with a stable coin where every day it's a lot, for example.
So Lucas, what do you think? When you go to pay someone or send him a stable coin, you have USDT, USDC, UST from the Trump Foundation, USD1 now. I mean, and there's going to be many coins in UAE as well. I think it's 5 of them that might get the license soon. Which one will be the right choice and which one should we use?
Yeah, I think to me it's like which are the most liquid one for me to get right from my other coins. right? That would be the one for my personal choice. But I agree that, issuing stablecoin is really a trend. This year, Hong Kong legislation, they just passed the stablecoin sandbox. There are 3 participants in the sandbox. And now, like, we work for one of them, with one of them. But nowadays, after the law passes, I'm speaking to somebody every day saying, I'm going to launch that. I want to participate in the sandbox in phase 2. Reason why, I think, first of all, to traditional business, stablecoin is really a simple and attractive business, right? You have your fiat reserve, you have crypto, your own crypto nodes circulating, then you use your fiat reserve to buy some, very safe or stable financial products. So simple, attractive business model. And especially when you are having a niche angle, let's say B2B e-commerce, a B2B commerce or e-commerce network, it's easy for you
So which one is the most popular in Singapore?
I believe it's still Tether and Circle. There are local stable coins, but Singapore hasn't have the so-called MES endorsed or recognized stable coins yet.
So as soon as you think they will have their own local one, this will be number 1.
Absolutely.
Wow.
Yeah, because you still have FX fractions, right, when it comes to USDT and stuff. But for Hong Kong, they're trying to already solve this problem. Then you see business are really, really excited about that. Yeah.
And Charmaine, what do you want to say in this stablecoin new environment? What do you think it will happen? You think we'll still have choices, or CBDCs will come in and they say, use this coin of the country, or there will still be choices out there?
Definitely. I think stable coins are an attractive option, especially in markets where there's high FX volatility or banking restrictions, and traditional wires are higher in terms of cost. And probably these are one of the reasons why even the traditional governments maybe are trying to move or having their own stable coins in picture. But as the other panelists mentioned, it all depends on how much trust and security does the stable coin provide, which probably would lead to the adoption that it would see.
Thank you, guys. I hope this was interesting. Please give a hand of applause to my colleagues.